All right, good afternoon once again, ladies and gentlemen. If you're just joining us, you're welcome to the Facts Behind the Figures presentation by eTranzact International PLC. My name is Vivian AK, and I work with the Group Communications and Partnerships team at NGX Group. And it is indeed my absolute pleasure to serve as your host for today. Now, before I proceed with the introductions, I would like for us to cover a few housekeeping rules. For our speakers, please ensure that your microphone remains muted throughout the session, except you have been invited to make a contribution or a presentation. Now, for our esteemed participants, a warm welcome to you once again. We invite your active participation by engaging and listening attentively to the presentations and the discussions we'll be having here today. And also, please drop your questions or comments via the chat box on your screen. Now, we have a designated Q&A session for questions and comments, and we'll attend to them during that session. Now, at this juncture, I would now introduce the esteemed personalities that we have on the call with us today. And I will start with the Nigerian Exchange Limited. Now, from our end, we have Mr. Jude Chiemeka, who is the CEO of Nigerian Exchange Limited. We also have the CEO of NGX Regulation, Mr. Olufemi Shobanjo. And then we have the head of primary markets at NGX, Mr. Tony Ibeziako. And we have on the call as well, Mr. Abimbola Babalola, who is the head trading and products at NGX. Now, moving on to the eTranzact International PLC management, we have leading the delegation, Mr. Niyi Tluwalope. Mr. Niyi is the managing director and chief executive officer of eTranzact International PLC. We also have the chief financial officer at eTranzact, who is Mr. Emmanuel Ogunji. And then we have the company secretaries from PAC Solicitors in presence of Mrs. Uloma Okoro and Ms. Olutola Makinde. You're welcome. Thank you. Now, today's event is divided into three parts. We'll have the welcome address from the Chief Executive Officer of Nigerian Exchange Limited, Mr. Jude Chiemeka, after which we'll have the Facts Behind the Figures presentation delivered by the Managing Director of eTranzact International PLC. Now at exactly 1 p.m., we'll have a Q&A session where questions addressed to eTranzact International PLC will be addressed accordingly. Now, just as a reminder to our attendees, please ensure to drop your questions or your comments in the chat box on your screen. Now, to bring the webinar to a close, we'll have Mr. Tony Ibeziako deliver the closing remarks and the vote of thanks. Now, without further ado, I will now yield the floor to the CEO of NGX Limited, Mr. Jude Chiemeka, to give a proper welcome and officially commence the session. Over to you, sir. Thank you.
Thank you, Vivian, and very good afternoon, distinguished ladies and gentlemen. On behalf of the board and management of Nigerian Exchange Limited and the entire capital market community, I welcome the board and executive management of eTranzact International PLC to today's virtual Facts Behind the Figures, FBL. The exchange highly values the FBL platform's opportunity for all issuers to interact with market participants. And today's session provides eTranzact with an invaluable platform to communicate its strategic initiatives, financial performance, and its future outlook. Given that accurate, accessible, and timely information is essential to stimulate market activity, your presence here today underscores your dedication to providing relevant information. We anticipate that today's interaction will be fruitful, encourage transparency, and ultimately enhance greater participation in our capital markets. Despite the prevailing economic challenges, NGX recognizes the efforts of the board and management of eTranzact in enhancing its operations, promoting business continuity, and restoring investor confidence. At NGX, we remain steadfast in our commitment to deepening the capital markets and fostering an environment conducive to sustainable growth and innovation. Through initiatives aimed at enhancing market liquidity, investor confidence, market integrity, and attracting listings, NGX continues to play a pivotal role in facilitating capital formation and investment opportunities across various sectors of the economy. Furthermore, as part of our commitment to sustainability and environmental responsibility, NGX is actively driving initiatives to reduce net carbon emissions and promote ESG, which is environmental, social, and governance goals within the Nigerian capital markets in general. Recently, NGX launched the Impact Board, which provides investors with financial instruments that will have measurable ESG impact. Recognize the urgent need to address climate change and promote sustainable development, and we are working closely with our listed companies, regulators, and stakeholders to integrate ESG principles into business operations and investment decisions. Through collaborative efforts and innovative solutions, NGX is dedicated to fostering a greener, more sustainable future for generations to come. Despite the domestic and global economic uncertainties, the Nigerian capital market has remained resilient with impressive performance indicators underscoring its strength, agility, and sustainability. The Nigerian capital market posted unprecedented performance in 2023, with the all-share index recording record highs of over 74,000 basis points. For the first time since the inception of the exchange, the market closed up significantly by 39.84% year-to-date returns in the first quarter of 2024, making it stand out as the world's best exchange in 2024. As of Friday, July the 12th, 2024, the exchange all-share index and market capitalization stood at 99 and 56 trillion naira, respectively. Our SM board, our SM index, which is really our alternative securities market index board, also emerged as the best performing index in H1 2024, with a gain of over 135%. NGX continues to perform in line with global trends. We provide a platform that is required for raising capital and investing, facilitating substantial financing for governments and corporates of more than 5.7 trillion year-to-date across various asset classes. Our advocacy efforts within the Nigerian government, especially around tax reforms and foreign exchange allocation prioritization for interest of listed entities, further enhancing investor confidence and market stability. Additionally, our support for listed companies extends to enhancing investor and customer understanding of the unique benefits associated with investing in such companies through our X Academy, which, including the recent event in the Ethiopian Securities Exchange, which further demonstrates our commitment to driving growth and innovation in African capital markets. So the X Academy is a learning arm of the exchange where we provide investors, issuers, as well as capital market participants, all the required knowledge that they need to navigate that space. This change has also made several capital investments in the exchange's technology, ensuring that we've had no downtime in the last 5 years, allowing investors a seamless ability to transact on the exchange. And this really speaks to the fact that even during COVID period, when there was a lockdown, the exchange and its market intermediaries were able to execute trades seamlessly for investors because of our commitment to technology, which plays a very huge element in our strategic trust as an exchange. Moreover, NGX has recently unveiled its digital investment platform. The digital platform is designed to democratize access to investment opportunities, making it easier for a broader range of investors to participate in the capital markets. This is really a long dream of the exchange, and we're truly delighted that that's finally materialized. And so from the comfort of your homes, your mobile phones, you'll be able to participate in offerings that are going on in the capital market. And speaking about offerings in the capital market, you do recognize the offerings that are going on now by the banks, triggered by the CBN regulatory requirement for bank recapitalization. So this technology, which is very user-friendly, and you can use from the comfort of your home, you'll be able to participate in the offers, both the outright offering of the shares of the banks, as well as right issues for existing shareholders. In a seamless manner, the technology allows you to participate in the offering, and you can make payments seamlessly. And that is really the heart of the exchange's trust in ensuring that we increase the composition in terms of the different grades of investors that invest in our markets. And we're truly delighted that it has now been fully launched. These engagements support the NGX's effort in ensuring positive impact to our listed entities, as they can now draw on a broader range of investors for all the capital raise initiatives that they may have as an entity. I therefore use this opportunity to invite eTranzact International PLC and all stakeholders to leverage the benefits of listing on the exchange, including improved access to capital, increased global profile, and access to liquidity. The exchange today prices itself as an entity that has over 20% international investors that play in the market. In the past, we were at 50-50, and the market will trade with typically around $50 to $100 million. Obviously, because of the devaluation and some constraints, the exchange continues to trade in line with global flows. So today, international flow in our market continues to be a critical part. And so when companies do utilize our exchange, they're also exposing themselves to this group of international investors that invest in our markets. I would now like to thank you, our guests, for your presence. I really want to encourage you to participate, especially as you're listening to the strategy of eTranzact. It will be an opportunity to ask questions, and I'm quite confident that the management led by the Chief Executive Officer will be able to provide insight as to what they're doing and how you can also benefit from their strategic growth as an investor. Thank you very much, and I hand it over back to Vivian.
All right, thank you very much, sir, for that beautiful welcome address. Now, I would like to invite Mr. Niyi Tluwalope, who will now deliver the facts behind the figures presentation. Over to you, Mr. Niyi.
Thanks, Vivian, and thanks, MD CEO. Thanks for this opportunity. We're excited as a firm, as an institution listed on the exchange, to be a part of this very exciting event. This is, I think, probably our first fact behind the figures session. So it's our maiden session. So and we have members of our management here. As already presented, my CFO, Emmanuel Ogunji, one of my senior team members in the strategy department as well. And I think we have other executive directors as well here to provide clarity at any point in time that is required as we go through a few slides, talking about the history of the business and then the facts and then the figures. So I'm going to share my screen shortly. Okay. Okay, just to confirm that everybody can see my screen. Okay.
Yes, sir, we can. Yes.
Okay, thank you so much. So the session is Facts Behind the Figures by eTranzact, and it's highlighting our state of play and also shedding some light on our strategic vision. And this is delivered by the management team of eTranzact. We'll start with a brief outline. Yes, shows 21 slides, but we should go through it real quick. We'll talk about the vision and the future, a mantra of excellence, a little bit about the company, the landscape, how we compete, and then, allow the CFO to do justice to the numbers, and then we take all the questions required. At eTranzact, our vision is clear. It's concise and it's straight to the point. It borders on what we do and why we were found. And the vision is to be the preferred integrated financial technology platform for merchants and consumers. To be the preferred, we have to be the most convenient and the most easy to use, the easiest to use by all merchants and consumers looking for fintech type transactions. Integrated financial technology platform means that once you come into our ecosystem, you have access to the various suite of products, solutions, and services we have through one API connectivity and one uniform KYC onboarding. You can access all types of financial products and solutions that you have been KYC'd to have and you qualify to have on the platform. For us, it's all about customer experience, ease of use, and service delivery. And our mantra of excellence that drives what we do on a daily, it's called TAWID. And it's very simple, and it drives what all employees and every member of the eTranzact team, it drives what we do on a daily basis. And that's TAWID, which means think fast, act faster, work smartest. Once you're able to achieve these three, we will, as a team, collectively innovate, and then we'll dominate the market space. This is what drives what we do on a daily, and that's our mantra of excellence. At the company, eTranzact was founded in 2003 as one of the foremost fintech institutions in Africa, and we have evolved into becoming a super fintech. We are a super fintech because we are licensed by the central bank to carry out switching and transaction processing, which allows us to build infrastructure that drives financial services across the ecosystem in the country. And on that basis, we are also licensed by the CBN to produce, build, innovate, and create solutions and products that we place in the hands of merchants and consumers. A lot of our clients are banks and merchants, financial institutions, and also we're driving our B2C direct-to-consumer strategy as well, building a subscriber base to drive our digital bank. That makes us a fintech. We are a super fintech because of the infrastructure dimension of our business. We have infrastructure that other fintechs that don't have the capability or the capacity to provide the last mile services, such as switching, payment processing, settlement, and reporting for their customers. They can build the products, but they can situate those products on our infrastructure to drive traffic on their platform and to meet their users and consumers' needs and wants. That's what we are. That's what we do. We view our role as pioneers and enablers of fintech innovation. Since our founding, we have been a B2B business, now serving banks, government, MDAs, large merchants, large corporates. Now we are evolving into, we've evolved into a B2C, playing more in the SME space, and also building and expanding our footprint with our digital banking solution known as Pocket Money. Most of you will know that solution. And we're also expanding, into the digital bank and providing and leveraging our network infrastructure in our agency business as well. Over the years, we've been awarded and recognized. Recently, in 2022, we received the award from the central bank itself as the most financially inclusive agent network of the year. We've gotten other recognitions: cashless driver, mobile money operator, also issued by the central bank. And in 2019 and also last year, we got an award as one of the top 25 managers leadership on the exchange, produced and issued by the Business Day, Business Magazine. And then also in 2019, we got an award from this exchange as the best corporate turnaround and transformational company for that year. We have other awards, global awards from Silicon Valley as well. Our performance over the last 5 years, has been growing. We've seen our net revenue grow at a CAGR of 30% over the last 5 years. And we reached and outperformed our 2022 performance of our net revenue by $3 billion. EBITDA margins continues to improve over the last 5 years, reaching 42% in 2023. PBT as well, continuing to improve on our PBT and profitability performance. We pretty much almost doubled our 2022 profit in 2023, and we reached a 5-year CAGR of 57% in 2023. Now, our licensing and capabilities. We have quite a number of licenses that allows us to operate as a fintech and also allows us to extend our fintech capability and infrastructure capacity to other fintechs to operate as a super fintech. We're a licensed switching and payment processing platform. We're a licensed PSSP. We're a licensed value-added service provider. We're a licensed third-party processor. We have an international money transfer operations license, which we use in a different dimension now based on new regulation. We're a licensed mobile money operator, and we're a licensed non-bank merchant acquiring license as well. We are restructuring and evolving into a holding company. That process is ongoing as required by the central bank based on our size and our operating capacity and the various licenses we have. We've been advised to structure into a holding company. And for us, this is a welcome idea because it allows us to evaluate our various businesses, looking at the sum of the parts contribution to overall value. And it also allows us to raise money specifically for specific business types and specific subsidiary types, targeting specific investor, their needs and their wants regarding the various type of licenses and business operations we have. That's a brief snapshot of the company. And just to quickly walk you through, because this is our first Facts Behind the Figures session, just to quickly walk you through our journey as fintech pioneers. Founded in 2023, as we said, we hit our milestone of 1 million transactions way back over 20 years ago. We launched our Corporate Pay 1.0 solution, which is the solution that pioneered salary payments for the federal government in 2006, 2007, and then relaunched in 2010. We finalized our IPO in 2008, 2009, with 2.1 billion in capital raised to become a PLC. And in that same year, we hit 10 billion milestone in annual transaction value processed. We've rebranded over time, and we also pioneered our mobile money operations, which is the pocket money, and we became a MasterCard processor over time in 2011. And then we also pioneered the mobile banking solution we see in all the banks today. That was started by eTranzact, and we hit 1 trillion milestone in annual transaction value processed in 2012. We had a small mishap, and a new management was installed in 2018, led by my leadership, my very humble self. We revamped our platform security infrastructure. We joined the Pioneer Shared Agency Network Infrastructure by the Central Bank. We were invited by the Stock Exchange to ring the closing bell. We received some of the awards I talked about earlier, and we revamped most of our enterprise solutions to face the new operating dynamics in the industry that we had seen. We came to the stock market. We did a rights issue. We raised additional capital via rights issue. And then we also did a convertible and raised a total of almost 9 billion that year in 2020/2021. That same year, we were formally integrated by the federal government into the National Treasury Single Account TSA collections provider, making us the second platform to achieve that status. Earlier in 2023, we hit 59 trillion in total transaction value processed on the platform, and a little under 4.9 billion in total individual transaction processed. And then again, we received some awards late last year in 2023, and that has pretty much set the stage for how we've fared over time since we were incorporated till today. I'd like to talk a little bit about our operating track record. In the whole of 2023, total transaction value processed on our platform is about 75 trillion naira, which was more than 40% growth on that of 2022. Total transaction value, individual transactions processed on the platform, about 4.9 billion. And then our average uptime availability averages at 99.5% on the switching infrastructure and settlement platform. And maximum processing speed is 1.2 seconds per transaction. We would like to now talk a little bit about the space. Why fintech? So much is happening in fintech. We have 2 slides that explains that. The first slide here looks at an overview of the fintech landscape in Africa. The number of fintechs across Africa, Nigeria is still the largest, 32%. New startups on a daily, weekly, monthly basis across the scope. Nigeria leads the pack, with Kenya, Egypt, and now Ghana following, as well as South Africa following behind in terms of the top regions that host the new fintech setups. And the key insight here is Nigeria is leading the base for the fintech startups, like we said, closely followed by SA. For context, Nigeria's population is only 15% of the 1.4 billion population of the rest of Africa. The combined fintech startups from Nigeria, South Africa, Kenya, and Egypt constitute 78% of the total fintech ecosystem in Africa. There's a lot of activity driven by the innovative ideas that happen in this region, particularly in Nigeria. A lot of brilliant, young and dynamic millennials and Gen Zs creating solutions, driving value and fintech processing and transaction consummation here on the continent. If we look at the revenue wallet share, the biggest activity, there are various activities across the fintech value chain offering. You have payments, you have lending and finance, blockchain, insurtech, investech, business administration, secure ID and security, personal finance, and any other thing you can create that requires a network and some form of payment infrastructure to consummate business. The key insights here, payments and remittances account for the largest share of revenue within the African fintech sector, constituting about 44% of the distribution. The lending and finance sector is also critical because that is an enabler for fintech across merchant space, across vendor finance lending, retail finance lending, consumer lending, across all of that. And that is driving a lot of growth and activity, even in the payment sector. Because for you to lend, there's got to be some form of payment and collection solution created around it to drive that activity. And then we see some of the newer solutions across the value chain landscape as well, ranging from blockchain, insurtech, investech, and all the other stuffs. Other sectors within the African fintech, something is wrong with the other sectors within the African fintech industry contribute a tangible share of revenue of over $128 million, accounting for 3.5% of that distribution. Payment and lending sector combined constitute 81.2% of this total distribution, while all the other sectors contribute 18.8%. I've zeroed in on payment and lending because that is where our infrastructure plays, and that is where we spend most of our resources, and that's where we generate most of our revenues. That's the biggest and fastest growing aspect of the value chain in fintech payment and processing across the fintech operation space. Even though there's new technology coming, which everyone is looking at, but currently these are the key drivers, and this is what's driving activity in that sector. If we look at the growth potential of the space, total payments revenue in Africa is growing by an average of 22.9% on an annual basis. To put that into proper context, this implies that the payments industry is growing at a faster pace than the oil and gas industry. Nigeria accounts for 16% of Africa's payments revenue today, and by all indications will continue to dominate the rest of the continent, growing faster than the rest of the continent at a CAGR of 35%. The growth of electronic payments in Nigeria has been characterized by the rise of fintechs, like eTranzact, that pioneer payment innovations supported by a nimble regulatory space. Critical to note that the role of a super fintech drives value creation and drives transaction activity in the industry. Fintechs don't have to recreate solutions that already exist. Fintechs can just go, create resources, raise money, and focus on creating solutions that solve complex problems with the assurance that they're bigger infrastructure providers that have already invented the wheel that they can leverage on, integrate with, consummate their APIs, and drive transactions through them. That way, we're creating value for ourselves, we're creating value for the fintech companies, and we're creating value for the industry as a whole and the market space. Now, how we compete, our corporate strategy is summarized in one critical page. This is how we engage and win in the marketplace. Our vision remains to be the preferred integrated financial technology platform for merchants and consumers. And that vision rests on three critical strategic pillars with the following strategic imperatives. The first is a full service switching provider. I had mentioned earlier that we have a license to drive switching and transaction processing, and that puts us out there as an infrastructure player. We can leverage that platform, and we have leveraged that platform to build solutions that drive transaction activity in the financial services ecosystem. We're connected to all banks, microfinance institutions, and we're aggregate mobile money operators, PSBs, other fintechs operating as driving and helping them, allowing them to consummate their transactions so that we operate as a super fintech. We expand our account-based switching services, deepening utilization from existing banks and fintechs, and onboarding more banks, payment service banks, and fintechs as they are licensed to drive transaction activity for the solutions they create to solve the complex problems within our financial services ecosystem. We've also leveraged our card switching capabilities to process card transactions and drive financial activity for our various financial services partners and merchant payment acceptance across the federal government, across the local state government, across MDAs, and across large corporates and small and medium enterprises across the competitive landscape. Because of the role we play, we have access to a lot of data. Over the just last year established, we processed over 79 trillion naira in transaction value and about 5 billion individual transactions on our platform. Those transactions are done by various individuals with different wants and needs. That's data. The type of transactions they do, the way they do those transactions, the time at which they do those transactions, the banks they initiate from, the banks they consummate with. We have all that data. So mining that data and understanding that data helps us with our predictive analytics that drive the type of solutions we create to solve problems, drive the type of investment we make in our infrastructure to create that enhanced availability and user experience we push out there to achieve our vision. Our merchant marketplace strategy is also clear. Our current focus is to continue to integrate all existing merchant solutions that address the evolving and varying market needs of large and medium corporate and public sector merchants across the space. This is a very critical aspect of our play. There was a report by MasterCard a few years ago that established that there were over 49 million SMEs location that required some form of payment acceptance or the other. And I think this report was in 2022/2023. As of that time, you had less than 2 million payment acceptance solutions serving this market space. That's the opportunity there. That's the growth we see. We have utilized a recently launched merchant acquiring platform, Credo, to drive and target and capture the SME and micro merchants for both offline and online payments acceptance. This is value creating for us and helps us to execute on our merchant marketplace strategy. And as a pace setter and a pioneer in this space, we continue to customize new and innovative payment acceptance solutions for merchants across various verticals. Critical verticals we're looking at now in the manufacturing, power, food and hospitality, transportation, and the education verticals. All verticals are considered, but this one's critical because of the opportunities we're seeing in the marketplace and the need for quick access to digital and automated ways and means of receiving and making payments. Finally, the third and most critical pillar for us now, because this is a completely different perspective on how we've operated in the past. This is direct-to-consumer play. This for us is driving and reposition our pocket money solution into a digital bank with a future-proof design capable of delivering exceptional customer experience and attracting millennial Gen Z user segments as well as blue-collar workers to drive transaction activity and to solve whatever payment or acceptance problems they may need to resolve at that point in time. We're also using this pillar to drive our continued expansion of our agent aggregator network in line with the geographic spread and need of the country. And one of the more recent partnerships we've considered and now leveraging on is our consumer-focused payment services, such as the value-added services around customer loyalty, buy now, pay later schemes, some form of credit, partnering with credit providers to drive activity across their goods and services operations in business and to drive subscriber user base and drive merchant activity within that base in general. And finally, in achieving this vision, we've identified the critical success factors, which we call enablers. And this for us drives success for us in what we do on a daily basis. Talent, capital, customer-centric go-to-market approach, cross-functional product teams, technology, and risk management. Talent is critical and has become very important in what we do. Technology talent, product innovation development, and strategy talent, critical for us to win in this marketplace. And we continue to build the capabilities to attract top talent, and we continue to create learning programs and partnerships with feeder schools and feeder agencies that can drive quick identification and early mentoring of talent that can evolve into our space, learn what we do, and be experts at doing it. Capital, we're at the NGX. We're pretty much the only listed payment processing solutions provider on the exchange. And to stay competitive, more capital will be deployed to fund evolving M&A opportunities as we see fit, because our vision is clear, our strategy is clear. We will consider both organic and inorganic growth opportunities as we deem fit to drive our merchant acquisition initiatives and product development strategy. Our customer-centric GTM approach is critical. We have to understand the marketplace, and we have to be as close to the customer as possible, which is why we've created a strategy that addresses critical aspects of the value flow and value chain within payment systems processing. You have to understand the needs of the market, and you have to understand the needs of the user, and you have to understand the needs of the regulator. You have to understand the needs of the merchants and create solutions that bring all of these people together and ensure consistency and staying in touch with market developments. We talked about our cross-functional product teams as well. It's all about products. We build the infrastructure, but those infrastructure drive products. Products is what we place in the hands of the industry. And having focused product teams that understand the needs of the verticals they operate in and understand the wants of the industry vis-a-vis the regulatory framework, critical for success. Technology, extremely important. We continue to invest in technology. We continue to spend and invest in R&D that helps us to understand, identify, and help determine the required technology, capacity, and capability that will help us drive what we need to do, what we've identified to do, and how we win in the tech space. Risk management, critical. So much is going on in the space with regulatory licensing, regulatory repositioning, cybersecurity, identity theft, and all of that stuff. It's imperative for us as a pioneer in this marketplace to have a robust risk management framework that helps us win. We want to be the first to market. We want to have solutions that are quick to market. We want to have the fastest onboarding on the continent in terms of bringing on new customers. But we also have regulatory requirements that allows us to ensure that everybody we bring on the platform is fit for purpose. Having a robust risk management framework allows us to achieve that in due time and in a very short time frame. That's what drives our strategy. That's what drives the pillars that drive our vision. At this point, I'm going to call on the Chief Financial Officer to walk us through the details of our financial performance for 2023, now that I have provided the facts. But before I bring him on, just want to share with you quick highlights. In the just concluded financial year of 2023, we hit a 33.9 billion gross revenue performance for the year. That's 50%, almost 50% above our performance in 2022. The highest we've ever done since inception. Net revenues about 9.2 billion, 51% growth from 2022. Gross profit 8.3 billion naira, 46% growth over and above the performance of 2022. Overheads also increased because cost of doing business increases. Business operating activity increased as well, but we managed to keep that at 36% growth over and above that of last year to ensure that we're able to extract more earnings into our operating profit and EBITDA and PBT performance metrics as well. And the graphs below show the trend of an upward mobile growth trend for the business so far. And lastly, on my side, EBITDA 3.9 billion, a growth of 63% over and above the performance in 2022. Operating profit 3.1 billion, almost doubling that of 2022. EBITDA 3.2 billion, almost doubling that performance of 2022 as well. And then finally, our PAT after taxes grew by about 87% compared to the same performance in the same period in 2022. And the firm is currently producing the highest amount in profit it has ever produced since inception, rising from our negative position in 2020 to growing at a CAGR of 72% over the last 5 years on a profitability perspective. I will pause here and allow the CFO to jump in and walk us through the specific details of the financial statements, which is his own forte. And then I guess after that we can take questions.
Thank you.
Thank you. Emmanuel, you want me to stop sharing or should I just continue for you?
Continue with it. That's the same slide.
All right. So there you go.
Thank you so much, Niyi, for that wonderful presentation. I'll take it from there. Niyi has actually touched on the major points of the statement of comprehensive income that we have in here. However, I know that the members of the NGX and also the general public will like to have detailed information about what constitutes our revenue and our business block. Basically, there are four major aspects of it, broken into switching, merchant acquiring, digital banking, and financial inclusion, and others that we have. So now, what we have done here is to compare movements between 2023 and 2022. In the year 2022, our switching contributed about 35% to the total gross revenue that you're seeing there, while the merchant acquiring, which is the major aspect of the business, contributed about 52%. And the digital banking, that's an aspect that we are still building on and expanding on, contributed about 9% to it, while the others, other things that we do contributed less than 1% to that entire flow. And we have seen that same pattern in the year 2023. We have seen how that evolves into numbers growing. Switching contributed 35, while it was 38 in 2022, it was 35 in 2023, and 57% in 2023, while it was 52% in 2022. And we have 8% for digital banking in 2023, while it was 9% in 2022, and less than 1% contribution also from other revenue. Like I mentioned earlier, Niyi has touched on the gross profit, the impact on the operating profit, how that moved from 1.5 in 2022 to 3.1, which is 97% growth that we experienced in our operating profit. And that gave us a profit before income tax expense, PBT, of 3.1 against what we did in the year 2022 of 1.6. That's 99%. That delivered a PAT of 2.2 against what we did 1.1 in the previous year. Can we move to the next page, please? Showing this, I know the aspect I want to dwell on here is that part where our investors will be interested in and the general public. Yes, at the end of the year 2021, we had a negative retained earning position accumulated to about 3.8 billion. And we were able to move that gradually to about 2.6 billion in the year 2022 end of financial year, and when ending the year 2023, we brought that down significantly to less than 500 million, and that's what we have in here. That brought the number to 496, and that's what we have in here, showing how the business has been growing, moving from a negative position that emanated from the 2018 situation into a position where I can tell the House and the general public now that we have traded completely out of this position in the first quarter of the year 2024. And that's the good news we are bringing to the House. Can we move to the next page? Yeah, these are statements of cash flow showing where the fund is coming from and how we have utilized it. It shows in here investment made in property and plant. It shows other movements that we have in our cash flow, not to take much of our time on this. So we have seen how our net cash used in operation of 9.2, a significant growth in that aspect of the business when compared with what we did in the year 2022, 500 45. And that also reflected in the way we have utilized the fund as well, talking about the net cash used in investing activities. And finally, you can see that cash and cash equivalent at the end of the year 2023 grew from 11.5 billion to 19.6 billion. That's a major movement, considering all the things happening in the business landscape and how the business has been growing both in transaction value and in revenue. Let's move to the next page, Niyi. Yeah, this shows the journey of statement of change in equity, how we have moved from that position I presented earlier, the negative position, into near positive that we are, 496 retained earning negative, which I mentioned clearly that we have traded out of in the first quarter of the year 2024. Let's go to the last part of this, please. Can you move again? Yeah, thank you so much. The major presentation by Niyi has covered the significant aspect of our numbers. This is just a highlight of the key aspects of the financials. We are open to questions, queries, inquiries, and we are here to answer all questions. Thank you.
Thank you. Vivian, over to you.
Great.
We'll take questions now. Yeah.
Okay. All right. Thank you so much, Mr. Tluwalope and Mr. Emmanuel Ogunji. So now to the audience, if we have questions, we'll be happy to address them. Just please make use of your chat box, drop your questions or comments so that it can be addressed by the eTranzact team. I know we had a very detailed presentation. I am assuming that would also have follow-up questions. I can see someone's hand is up. Please use the chat box to drop your question. Okay, oh, do we take it that we do not have questions from the eTranzact presentation? Okay, so I think we have questions now. Okay, starting with Mr. John Jones, who is asking, is AI impacting your business processes and any issue with security of your infrastructure till date? And then we have another question from Maxwell Kadiri. He's asking, what is the position now with the challenges that emanated from the issue that involved First Bank a few years ago? And then we'll take a third one. What is your key strategy for beating existing and potential competition in your space? Mr. Niyi, Mr. Emmanuel, over to you, please.
Okay, I can take some of that, and I can ask the other team members to drive the answers here. So the first question, is AI impacting your business processes, and is AI impacting your business processes and any issue with security of your infrastructure till date? Well, AI is today AI has got to impact any forward-thinking fintech. AI, you have to be thinking AI, because it's clearly the future, and AI has actually crept into our business regardless of whether we knew it or not. And I want to speak from the aspect of fraud management and fraud monitoring. You've got to have leveraged that to be able, to monitor customer transaction activity and trends on the platform regarding fraudulent transactions, being able to identify, you have to build logic and leverage on those predictive logic that helps you to determine unusual activity of customers on the platform or usual activity of accounts on the platform. So all of those type of logic is largely driven by AI. And that has always really pretty much been, in the backdrop of cyber security frameworks within a payment processing infrastructure platform. Now it's pronounced, and now it's been taken to different dimensions. It is indeed impacting our business. AI is also impacting our business in product design. AI is impacting our business in, product interfaces, how you're able to build solutions that help help predict customer needs, customer wants, and the next things, customers are going to do. AI will be leveraged, to drive even API integration, customization of the type of solutions you display or you feature for specific type of customers. So it's something that's critical. And we've even just recently partnered with one of the research centers in Africa and one of the leading global consulting houses in strategy to drive a research on artificial intelligence for SMEs. We're pretty much trying to establish and identify the readiness of SMEs to adopt AI. That's going to do a couple of things for us. Help us understand how ready they are, if they are. Help us engage and teach them on what they need to start thinking to be ready. Help us gather information from that business segment on what their needs are that will help drive the production and design of products and solutions to suit their everyday needs with the leverage on the AI evolution in the marketplace. When you say any issue with security on your infrastructure till date, there's been no successful issue. There will always be attempts because as much as you continue to grow transaction activity, you have to, as a true fintech player with payment processing and settlement capabilities, we have the infrastructure that can debit any account in the country and credit any account in the country, even in the central bank. So you have to have the highest level of firewalls and security infrastructure that prevents any security breach, identifies any security breach, and quickly manages any security breach. In the last 5 years, we've not had any successful intrusion on our platform, and that's a good thing for us. But for us, it's all about partnership and collaboration with the critical players in the value chain of payment systems. That's what drives success within that space. The question: what's the position now with the challenges that emanated from the issue that involved First Bank a few years ago? Well, what I can say now is this is history. This is behind us. Today, we're a fintech provider to First Bank. We're driving transactions into First Bank. In 2023 alone, we processed almost over 7 trillion value in transaction value into First Bank. So that should tell you how the issue with First Bank has been. There's a lot of progress there. It's a great bank. It's a good partner, and we'll continue to deepen our partnership with them, co-create solutions together, and take on the market space. Are we planning on capital raise in the immediate future? CFO, do you want to touch on this?
Yeah, thank you, Niyi. Let me also quickly mention that not just having the security equipment and all that, we practice in industry where we are constantly being audited by different regulators, CBN in particular, and we have gotten a very clean audit So far, for the past, like Niyi mentioned, for the past 5 years, our record is there, is clear for everybody to see. So you can always check that. Yes, the business is expanding. Every aspect of our business is growing. Transaction value is growing. Even our key partners, the banks, they are expanding in scope and in capital base. So we are looking at in that direction right now, because if our critical stakeholders, they are expanding their business, raising more capital to expand their scope and their coverage, definitely those of us who are service providers to them should be thinking in the same direction. So we're engaging our board on that. We'll come back to the general public on the direction the company will be going on that. Thank you.
All right. Thank you so much, CFO. I think the next question, what is your key strategy for beating existing and potential competition in your space? Very, very good question. That's why we spent that much time on, on the strategic pillars. That's how we win in the marketplace. You have to leverage on your full service switching infrastructure to drive activity in the ecosystem. You have to leverage that infrastructure to drive activity in the merchant marketplace. You have to leverage that infrastructure to drive activity in the direct-to-consumer space. For us, it's critical to be present in those markets. And the critical driver for us is availability and user convenience. Top. That's what actually defines who wins in the marketplace, not pricing. High availability. And for us, high availability means you are available all the time. It also means you are available in as many places as possible to consummate a transaction. I give you an example. We've gotten mandates just because we're connected to all the banks in the country. That's availability. So mandate issuers will want platforms that are robust enough, that have interconnectivity with all banks and financial institutions to facilitate payment acceptance and payment collections for specific payment and collection initiatives. So for us, high availability on a tech aspect and high availability on a spread aspect, critical to success and winning in the marketplace. User convenience. People must be able to start and finish transactions on your platform at the easiest and most convenient way. There is no clear end state for this. It's a continuous improvement, because you always want to, you're only as good as your last performance. You want to consistently on a daily, weekly, monthly basis, evaluate your transaction turnaround time, improve on it. We've built product analytic flows that help us see within our various solutions out there how transaction flows and how transaction dynamics evolve. So we're able to quickly predict and see where we have roadblocks. We go in and try to resolve it before it piles up. So as we continue to improve on user convenience, ease of use, availability from an operating standpoint, availability from a geographic standpoint, you win in the marketplace. Pricing is a third pillar. That's what we've discovered. So we don't really play the pricing game, because if you offer the lowest price, if your service is not up to par, the people with the higher pricing with up to par service will continue to dominate the marketplace, and that's what we've seen. And next question: competition by the banks following the new entrants. What is the competition likely to be? Yes, it's going to be fierce, especially now that banks are raising money. But tell you what, we've been doing this for 20 years. We've seen the entire circumference of fintech evolution up till today, and we know where all the dead bodies are buried to get onto this place. Anybody that is starting now will have to go through that. No, it's probably going to be easier because now there's a lot of money and there's newer technology, but we're not going to sit down and shy away from it, which is why we are very clear with our vision and very clear with our strategy and very clear with our operation dynamics. Banks have been banks for several years, and out of the population we have and people that can do financial services, they have less than 40% of that space. Today, we have data that shows about 170 million people can do financial services. We have less than 65 million or less than 70 million, BVNs. So for the sake of this example, say about 65 to 70 million bank accounts, because BVN represents individuals. That's banking the way they know how to do it. What we've seen in this space is the opportunity for the non-banked. And that's really where we see the growth. A lot of the fintech brands, fintech noises you see today, everybody is still building solutions for the same banked people. No, but not a lot of people are actually focusing on where the growth is. Those that do financial transactions that don't have bank accounts. It's not about recreating wallets. It's not about recreating wallets for people that have bank accounts. What are we doing about building financial inclusion in those ecosystems that are excluded? That's really how to win in this marketplace. Whoever can crack that, the first few people to crack that successfully will dominate this space for the next 10 years. That's what keeps us up every night and what brings us to work every day. I believe that our time is up, and I've been notified that we've actually run out of time. Very interesting presentation. We prepared really well for this because this was our first, and I hope we've been able to try as much as possible within the short time frame to tell you about who we are, why we do what we do, why we win, and how we're going to continue to win. Thank you very much.
All right, thank you very much, Mr. Tluwalope. Just to round up, would you like to take 2 or 3 more questions before we hand over to Mr. Tony to deliver the closing remarks?
Okay, absolutely. There's a question here I like. Good sirs, wonderful presentation. My question is, tell us why you're not visible in the media.
Okay.
Okay. Oh, Vivian, were you going to pick the questions?
Oh, no, I mean, we can proceed whichever way. So we can take that question. And I see that there are about 2 questions touching on ESG and sustainability in the business operations of eTranzact. I think that would also be a good question to respond to.
Okay, so
all right.
I think we're visible. Okay, you want me to answer the questions?
Yes. So Mr. Aziz is asking how you're incorporating sustainability into the business operations of the company. And then I think I saw another question around that, where Mr. John had spoken about how the organization is impacting the society with regards to CSR. Then you can also address the question about being visible in the media. Then we round up. Thank you.
Okay, I think we're visible in the media, but if you remember, yes, we're quite visible in the media. If you remember the presentation, we talked about the fact that we were largely, over time, a B2B business. So our clients were largely merchants, banks, and large corporates. So those are transactions that come to you because of who you are. Who you are and what your reputation is. But as we build our consumer-facing pillars and consumer-facing marketplace, you have to take the solutions out there into the marketplace, and you have to talk about what you do, and you have to drive transaction activity from that perspective. So which is why historically, you may have a point. We have not been big on media, but since this new management came in, I can assure you that we've invested a lot more in our media presence. When we cut out our strategic footprint to include building a direct-to-consumer aspect of our business and being more visible in the merchant marketplace. We would like to do more. I also take that question as some form of feedback, because if you're asking that question, that means you're probably not satisfied. And as an investor who's interested in this space and interested in our business, it's a good feedback for us. There are plans to do a lot more. From a product perspective, rather than only from a corporate branding perspective. On CSR, we're big on CSR, but then again, maybe that's not something that makes the media. Call it what you may, but we support a couple of initiatives. One of the more initiatives we've done recently is to take out specific schools, primary schools, and identify their needs, and provide resources to upgrade their learning facilities, books, and all of that. We've done a couple of that. We've done some within our operating environment. We've identified the very low income, or those that struggle to feed, particularly around the COVID time, where we ran our program eTranzact feeds the street on a daily basis. For a couple of months, we were feeding the general public within our office and operating environment area on a daily basis during that period. On an annual basis, we partner we do some partnering with the NYSC, where we go and make presentations to NYSC new intakes, and pitching the value of our company to them, and providing some resources to upgrade some of their facilities there, and then also getting the opportunity to mingle and identify good talent, people that want to learn what we do and want to be a part of our institution going forward. So that's what we've done in CSR, and that's how we plan. That's how we have managed our media presence, and how we plan to manage our media presence going forward. Thanks for that feedback. It's well noted. Thank you so much.
Thank you, Niyi. Maybe I should just quickly address the aspect of how we are incorporating sustainability and ESG into our business operations. I think that's very key. Niyi has actually addressed that in his presentation earlier, that our products and services are built to create a sustainable environment for every user of the service. And that's part of the thing we consider. It's not, for us, it's not about profitability alone. It's also about empowering people to come into the financial ecosystem, and also to enable the economy, not just looking at our own business now, but looking at the general economy in regulating the financial ecosystem. That's the way we think. Also, our investment in property, plant, and equipment speaks about eco-friendly investments. We consider a lot of this in all the investment we make, and that's critical for us as a business.
All right, thank you very much for that detailed response, Mr. Niyi and Mr. Emmanuel. Unfortunately, we're out of time, but between NGX and eTranzact, we'll do our best to address every other question that has been dropped in the comment section today. To watch a recap of today's session, please visit the NGX YouTube channel. You'd see the video will be uploaded immediately after this event. Now, without further ado, I will now yield the floor to the head primary markets at NGX, Mr. Tony Beziako, who would now deliver the closing remarks. Over to you, sir. Thank you.
Thank you very much, Vivian. First of all, I would like to thank the CEO and executive management of eTranzact for coming forward to do these facts behind the figures. It clearly shows that from the robust presentation and the responses to the question that the management has provided, that a lot is going on within the company, and we are happy that you've taken the right step in this regard in trying to engage the market. Also, I would like to encourage the company to maintain the culture of providing the market with timely financial information to enable investors take informed decisions in the way they price your security. As you are aware, timely information, it's basically what drives the market. People take informed decisions, and even speculators take decisions based on provision of timely information. So we would encourage you to continue on this with this attitude to always engage the market. Last but not the least is to also encourage the company from a business development perspective. I noticed that as the company is considering devolving into a whole company, the NDX wants to be your trusted partner in that process. And we are here to encourage you and to work with you as you either want to list that local entity or considering listing any of your subsidiaries, especially emphasis on our tech board, which would help with your valuation and also fit into very much into your vision statement. We also want to thank the investing public and all stakeholders that joined us this afternoon. We hope that this session has been very informative and useful, and we look forward to having you guys actually come to the floor of the exchange, either for a closing gong or for another session as you look forward to a potential capital event or a liquidity event. Thank you very much, everyone, and have a wonderful week ahead. Thank you.
All right, thank you very much, Mr. Tony Biziako. As we draw the curtains on this session, I'd like to thank the leadership of eTranzact International PLC, the management of Nigerian Exchange Limited and NGX Regulation Limited, and all our participants for attending this session. Please enjoy the rest of your day and remain safe. Goodbye.